Hello and welcome to another Major Market Movements video blog update for December 26, 2014. I'm Quad G, and in this video we're covering the Japanese candlestick pattern called a harami. Now, harami is a Japanese word meaning pregnant, and the one reason I think they called it a pregnant candlestick pattern is because the initial candle is usually very small, but has the potential for generating new life, a new spurt of energy if it is confirmed. And so we're taking a look at a silver chart here on a daily basis. And here's a prime example of a bullish Harami candlestick pattern. And what you're looking for in this particular pattern, it's somewhat complex and can be difficult to recognize. And it's kind of a stealthy candlestick pattern because of the complexities that are involved. But what you're looking for is for a bullish Harami, you're looking for a previous downtrend that's usually fairly strong with at least, preferably at least 3 days of downward trend or longer. And then at the end of that trend, you're going to have a very small bodied candle that's opposite of the trend. So here we've got 3 negative days, and right here is our harami, which is a small bodied candle that is positive. By itself, a harami, as far as probabilities are concerned, are not something to jump into right away. I prefer to have the candlestick pattern be confirmed with the next day seeing a close, preferably the next day, or as much as 2 days out from the harami, having a confirming candlestick that moves up and closes above the previous downtrend, the open of the previous negative candle, similar to what we have here. So we had the previous downtrend, the harami shows up, small body candle, and then the next day with the market dips down intraday and then shoots back up and then closes the previous negative candles open right there at, in this particular case, $18.29. And so that confirms our Harami candlestick reversal pattern, sets a key low right here at the low end of the confirming candle there at 1775, and then the follow through takes off and runs. So that's a prime example of a bullish Harami candlestick pattern. And if we go to this chart, you'll see the follow through from this very meek and mild, almost hard to recognize reversal pattern compared to that of a engulfing candle or a hammer candle. We do get some significant follow through to the upside. It's hard to believe that such a small candlestick pattern could be the foothold of what ended up being a major trend to the upside here in silver. All right, so let's go to gold here. Here's another prime example of some haramis in gold that ended up producing some follow through to the upside. Here we got a downtrend, several days. We got a small body candle, again by itself, not very powerful, nothing to really work off of for a trade. But the next day, we get the confirming candlestick pattern that moves up, closes above the previous negative candle. We get a nice pullback towards the key support there at 1074. So we get a dip back down there to about 1088 or so. So providing a fairly low risk entry point, and then advance to the upside. That only lasted a few days, and then the trend reversed and came back down. Saw a hammer candle here, and the trend starts to move up again. another dip, and we see another Harami candlestick pattern with a few days of downtrend, the Harami candle, the confirmation candle right here that closes above the previous negative candles open there, and then it's off and running again. And if we back out here, you can see the sizable uptrend that arises out of that bullish candlestick, Harami candlestick pattern. All right. Let's move on to the euro here, which shows a really good example of a bearish Harami. Same thing as a bullish Harami, just inverted. You're looking for a strong uptrend, small body candle, and then the confirming candle to the downside that closes below the positive open of the previous positive candle there at 3903. So that sets a key top back here at the most extreme high there at 142.46, excuse me, and then you start to see some follow through to the downside. I'll look into this chart and we can see how here's the previous strong uptrend, the Harami, the confirmation, and then we get this multi-week fall through to the downside. So very, very powerful candlestick patterns we're dealing with here, especially on a daily closing basis or even weekly closing basis. All right, so corn, here's another prime example in corn, except it throws in a little bit of a difference here in that the previous uptrend is strong, but the day closes as a doji, which means a candlestick that instead of a small body, you basically have a candlestick that opens and closes at the same spot in one day. You can see there's an intraday swing to the upside and intraday low, but the day closes exactly where it began for the setting up the doji. And that's fine. That registers as a small body candle. And the next day comes down and confirms that with a close below the previous positive day's open, confirming the Harami and setting a key top there at the top of the doji, and that high was at 834, so it set a key top there, tradable top. Initial trend started to go to the downside. We had a bounce back up, providing a low risk entry, and then there you can see the follow through to the downside after that, which was fairly significant. Actually, that particular daily candlestick pattern ended up being we back out here, ended up setting off, being setting a major top in this market, starting at in the $8 lower to mid $8 range. It slid all the way down here to the $4 range, almost losing 50% of its value. So what's coming up? Here's an example, current example of a bullish Harami candlestick pattern in sugar that's currently in play. You see the strong downtrend. Got the Harami small body candlestick pattern. We got the confirmation that came up and closed above the previous negative candles open. And since then, we've kind of fiddled sideways for a bit, got an outside key reversal, saw some follow through to the downside on that. So right now, we're looking at what could be a fairly low risk entry here around the $14 upper $14 range, just above 1462. If this is successful, then we should see some follow through to the upside fairly soon. Obviously, just like any candlestick pattern or any technical pattern for that matter, it is not 100% accurate and 100% perfect all the time. So these patterns can fail, and when they do fail, they can produce some significant follow through to the downside. So you want to make sure that if you're going to put in a play for this kind of candlestick pattern, that you put your stop loss levels just below the key supports. So if that level is tripped, you get out fairly early with a small loss because the probability is that if a candlestick pattern is tripped, if it's broken, that it's going to produce some significant fall through to the downside. So, all right, so that's it for our Harami overview in this segment. I hope you find these videos educational, and I appreciate any feedback you might have on these, whether these are helpful or insightful for you. All right, so that's it for now. You all have a good week, and we'll be talking to you later. Adios.